welcome everyone to another Spaces. We have Lyra with us today, and we're just a little late to get going, but we'll just start off with some introductions. Why don't you guys just tell us who you are and what you do in the protocol?
Hey, yeah. My name's Nick. I'm one of the co-founders. I work primarily in the financial engineering side. I used to be a professional options trader before working at Lyra.
Hey, I'm Mike, also one of the co-founders. Used to be at Synthetics before starting Lyra with Nick and a couple others. Used to do smart contract engineering before I got kicked out of that and doing more governance stuff these days.
My name's Cody. I do kind of community growth and some business development at Lyra. And I've been there for about almost coming up on 2 years now. Doesn't seem like it, but yeah.
Time flies in this space, especially if you're working in it. All right, so why don't you guys just explain maybe what Lyra is and how you guys got started?
Yeah, I can take that one. So most of you probably know already, but Lyra is a protocol for trading options. It allows traders to buy and sell options on crypto assets like ETH and Bitcoin. It can actually support any ERC20 asset, assuming it's a sufficiently liquid market. And that happens through our community governance process. So we've already had a number of assets kind of listed and also delisted by the community, which has been cool to see. I think the way to understand the protocol best is to kind of talk about how it works. And I'll do that a little bit and then explain kind of how we got started as well. So Lyra is an automated market maker, which means that instead of trading against a specific counterparty like you would on an order book, trades occur against a pool of collateral, which is managed by a smart contract. So a lot of you are probably pretty familiar with this paradigm. It was introduced originally by Uniswap and it's become somewhat ubiquitous throughout DeFi due to really its suitability in the on-chain environment. So what I mean by that is like the blockchain's obviously an asynchronous place, and instead of having to kind of post an order and then have an order filled by someone else like you would on an order book, when you trade against an AMM, you can get your trade completely done in one transaction. And that's because Lyra's AMM is always quoting options prices directly in the smart contract. So we think AMMs are super suitable for this environment, and that's kind of the main reason we decided to build Lyra as an AMM. Lyra, though, is quite different to traditional AMMs, right? And the way I think to best understand that is through three different kind of lenses. The first being like liquidity and how it manages funds. The second being pricing, how it actually prices the options. And then third being risk and risk management, which is kind of entirely new to the options context. First on liquidity, this is probably the most similar to what you kind of expect in, say, Uniswap style AMM. Lyra, like all AMMs, uses a liquidity pool to aggregate funds. So those funds are kind of used to collateralize option trades and also pay option premiums to those who sell options to the AMM. So we actually call our liquidity pools market maker vaults because they're a fair bit more complicated than your average liquidity pool in terms of what they do on both the pricing and the risk side, which I'll just briefly explain now as well. So for pricing, with say a Uniswap style AMM, you're trying to work out what's the ratio of say one asset to another to find the spot price. But when you're trading options, you're trying to work out kind of what the market value for implied volatility is, and that's kind of the key input you're trying to figure out in an options pricing context. So Lyra's AMM is concerned primarily with that, and it has a mechanism that will kind of shift implied volatility up when people buy options and shift it back down when people sell options to the AMM, and that allows it to converge on a pretty fair market value for implied volatility, which is kind of how you actually price the option. Once you have that value, you can then sort of plug it into a formula known as Black-Scholes, and you get a price out the other side. And all that stuff is quite computationally intensive, which is one of the reasons that Lyra was kind of designed originally natively for Optimism, but more broadly kind of like native for L2 environments where you can really get performance and scalability that you can't get on L1. The last thing I'll say just quickly on the intro side, what Lyra is just the risk piece. Options trading is inherently very, very complex and risky, and much riskier than say spot trading. So you're exposed to a number of different risks across like heaps of dimensions. So Nick can do a good job explaining these. He used to be an options trader, but we're super concerned with both asset price risk and implied volatility risk. So the former asset price risk is sometimes known as delta risk or delta exposure. And what our AMM will try and do is it will try to go and hedge that risk that LPs incur on another market. So to date, we've been using Synthetics, which is, as you all probably know, a perpetuals trading platform, mainly on Optimism now, used to be on Mainnet. But this concept of delta hedging really is kind of independent from any one venue. It sort of just depends on having a venue. So we're going to talk about, I think, that a little bit more later today, who we're going to be integrating with on Arbitrum. And then secondly, the Vega risk or IV risk, which is kind of like how much LP is exposed to when implied volatility goes up or it goes down. And that one's a bit harder to hedge because you need options to hedge it. But we basically have a mechanism that Nick and the others design, which sort of like has a proportionate fee that's applied to options trade. So if you're increasing the risk to the pool, you kind of pay more. And if you're decreasing that risk, you pay less. And in that way, we kind of hope to have a flow balancing or a self-correcting mechanism, which can really keep the AMM as neutral as possible. Now, there's a lot more I could go into, but I'm worried about sort of just taking too much time at the start. But that's kind of a summary of how it works. Happy to go into more depth on any of those. And I know I haven't really answered how we got started, but just briefly on that, I think it was about halfway through 2020 when Nick and I started sort of looking at the on-chain environment during DeFi summer and seeing a whole ton of protocols kind of really starting to find traction and users. But when we looked at derivatives and specifically at options, there wasn't really any leading candidates. And there's a few reasons for that we can go into if you want, but mainly sort of things around L1 gas fees and latency and also expertise that were missing. So we kind of teamed up with a couple others and started almost 2 years ago now.
All right, sweet. Yeah, I know you guys have been around for a bit. I've been following since the early days. May or may not have even used the protocol several times back in my early days there. Do you think, without getting like too technical, because I know, as you said, you could get really deep into it, just where we have a lot of beginners in the community, and I usually like to do this in the early part of the AMA, just kind of explain what an AMM is and like how people are interacting with it in a simple way.
Yeah, I'm happy to. So, I mean, an AMM, if any of you have used DeFi before, like Uniswap or even something like Aave or Compound would classify. For me, I just think of an AMM is when you have a smart contract that sort of has the job of managing funds and also providing pricing for an underlying product. So that could be a spot swap like in Uniswap. It could be a lending market like Aave or Compound, or it could be an option as well in our context. And all it means is that instead of trading directly with a counterparty like you do on, say, an order book or in a peer-to-peer model, you're trading peer-to-pool, which means you're trading directly with a smart contract. And we think there are a number of benefits to that. Again, in the blockchain context, I sort of touched on it briefly before, but the ability to sort of have your transaction, your trade fully handled in one go is really important. I mean, we're not on L1, so it's not as long in terms of transaction wait times, but even on L2, there is latency. It is asynchronous, so you don't want to have to wait for someone else to come and accept your trade. I think the other thing that might be interesting to talk about with AMMs is like, because the blockchain's open source, you can fully inspect the code of an AMM, understand exactly how the algorithm works, and really have a deterministic guarantee for like what your trade's going to do. Is it going to go through? Is it going to be rejected? And that's helpful not just for traders, but also for integrators and people building things on top. Like, I mean, Nick will probably touch on this in a bit, but options are super composable and can be really, really like well used throughout DeFi. And when you have an AMM, you sort of have a guarantee that you're going to be able to have liquidity, you're going to be able to have pricing, going to be able to have trades go through. You don't have to wait for someone on the other side to come to fill your order or not.
And yes, that is the easy way to explain an AMM, unfortunately. Great, thank you. Nick, maybe you want to get into what options are and why they're important to DeFi as well.
Yeah, I mean, simply an option can either give you the right to buy or sell an asset at a given price at a future point in time or up until that point in time. So really simply, like options really got going, I think, in Chicago, with in the agricultural commodities industry. If you were, for example, a farmer who had a harvest of wheat coming out in 6 months, you have a ton of, fixed costs and upfront investment you have to make to get that wheat, processed and grown and harvested or whatever. And I'm clearly not a farmer if you can't tell. But if you want to lock in, and know for sure and lock in your financial stability, you can purchase an option, like a put option. What that will do is lock in a price for you to sell your wheat at. So if wheat's trading at $100 per bushel, in 6 months, you can buy a put that expires in 6 months and allows you to sell it for at least $80 or $90 or $100, depending on the payoff you want. And that's really useful as just a general financial instrument. They're used for all sorts of things, from commodities to stocks to interest rates and things like that. And they just allow people to lock in cash flows in the future today in a very precise way. The cool thing about options is that you can combine a variety of different options to create almost any payoff you can imagine, which makes them kind of like the Swiss Army knife of financial tools in a way that is just not accomplished by, whilst perpetuals and spot exchanges are useful, you can't get the sort of granularity and specific payoffs that you can get with options. So they're an extremely important and composable tool in that sense, because they can be recombined in so many different ways and generating so many different payoffs. You can think of them as like payoff complete in the same way that a programming language might be Turing complete. You could use them for all sorts of different things, and I think that's exactly why they're such a strong primitive and such a useful one within this composable world that we're building.
Okay, so where options are such a useful like financial tool in trading used in like traditional markets, so why haven't they, I guess, in your opinion, blown up in DeFi yet?
Yeah, that's a great question. And I think like this is an answer that I've been thinking about a lot. I think the easy, obvious answer is, nothing's really hit the level of performance that really needs to be there to facilitate enormous volumes with options. It's a much trickier problem because they're so much more flexible. It's a much trickier problem to solve than, say, a spot exchange. Having said that, I think the second biggest reason is kind of a more like generalized crypto market reason. To date, since crypto's really launched in the launch of perpetuals, I think BitMEX launched them in 2016. We've been in a low interest rate environment, and crypto is generally served as as kind of like a casino, right? Like there are lots of useful things being built, but all of the speculative activity is happening on assets that really aren't generating any cash flows. It's not to say that it's wrong or there's a problem with that, and speculation is an extremely necessary activity, particularly for emerging technologies and industries. But I think that if you are too anchored to the last 5 years in terms of how you think about the crypto world and what's useful, you might think that like the only important thing is to optimize for this casino. As interest rates go up and as more and more useful things start to get built, people are using and paying for products and cash flows are being generated on chain, and real world assets, begin to migrate more and more on chain. I think we had the BlackRock CEO last week say he can't wait until all securities are tokenized and put on chain. There is going to be a real need for these sorts of sophisticated financial products that allow you to lock in payoffs into the future, that aren't continuously expiring, that allow you to tailor your hedges. And options really can work in any sort of market and really support this next level of financial activity beyond just speculation. And I know people think of them as a speculative tool, and they can certainly be used for that. But the sort of functionality extends so much more beyond than just simply acquiring leverage, which I think, again, I think we'll see a substantial shift in the crypto market and how people sort of think about crypto assets and value them over the next few years. And I think options will have an extremely big role to play in that shift. And I think that that's coming imminently. And I think if people get too stuck in thinking about the crypto market as how it's been in the last 3 years, they're going to miss the opportunities that come up over, the next 2 or 3 as the world changes.
Yeah, I think that's a good point. I agree. From that side, it feels like DeFi itself, while it has been a big propeller of bringing a lot of the value in let's say TVL to the crypto space and the markets, it still has felt like a very experimental space and a speculative space, as you said. So what kind of things are Lyra doing, I'd say, uniquely to solve the problem of that gap between speculative and more usefulness?
Yeah. So, beginning with this launch of Newport, and, we sort of have a toy version already live on Arbitrum, sort of excitingly now that we're sort of testing out and playing around with and should be sort of fully live in the next few weeks. We will have, some of the lowest spreads on the market for ETH and Bitcoin. We'll have, much deeper liquidity and a much more efficient AMM. I think you'll find that if you come onto the sort of Lyra platform, you could, it's the most sort of complete options product on the market on chain today. You can buy or sell options, for a variety of different strikes and expiries. It's all market driven, and it allows and facilitates this composability by being an AMM and being always on 24/7. So for us, we've had 5 or 6 different projects already build on top of that liquidity and build out all sorts of different use cases on top of the AMM. I think growing into the next year or two, what we're really focused on doing, and I guess the other thing I'll note is that the AMM, unlike some of the other AMMs out there, or AMMs kind of get a bad rap for impermanent loss. If you go and check the historical performance of the Lyra AMM, it's actually been returning between 8 and 10% annualized pretty consistently since we launched in August 2021. And that's without, that's real yield, not sort of incentivized or, incentives on the top. And I think the reason for that is there really is a nice property to implied volatility that, suits automated market makers because it is mean reverting. And if we're making markets on a mean reverting asset, that really suits the AMM paradigm. So for us, this is what we've started with. Wow, I didn't realize it was that good, but I'll take it. I'll take what I can get.
IV's mean reverting, the crowd goes wild.
It's wild. They love a sustainable AMM.
It was in unison too. They were all just.
So yeah, like for us, I think we positioned ourselves with a product that really can meet the market where it's at now, and we have some serious ambition to expand well beyond the scope of what we've built to date, even the one we're launching now, to build for this world. So there's a lot more to come, and really. We see this current launch as a huge piece to really building out and showing people the power of options as we continue to work and build to integrate more and more assets onto the platform and really start to link what's happening in the real world with the sort of financial rails we're building here on chain.
Oh, that's awesome. And like with building, I guess I'm wondering, why have you guys chosen to build toward Arbitrum and on Arbitrum, and I guess why now as well, if it's relevant?
Yeah, I can take that one. So Lyra really only works on layer 2. There's a lot of complexity involved in getting options AMM up and running. I touched on a little bit of it before when I explained the mechanism, pricing, risk management, liquidity, all this stuff. Like it was never really going to be possible to do on L1, which is one of the reasons why I haven't seen options take off really in the first few years of DeFi and crypto. It also requires our implementation of Lyra, and the hedging capability requires sort of a venue or a spot market that you can go and trade assets on to keep your LPs hedged. So for us, going back a couple of years, we were very close to the Synthetix ecosystem. I was actually working there as a core contributor. We knew that we could sort of build this mechanism integrating with Synthetix to hedge, and they were on Optimism. We knew Optimism was going to come straight to the market pretty early along with Arbitrum. So we chose to do our first version there. And we've had a lot of success, and we've really enjoyed that being native to Optimism. But in the last sort of 6 or 12 months, we've noticed sort of distinct ecosystems forming on different networks. So, the Optimism crowd is different to the Arbitrum crowd, which is different again to Polygon and all these other networks. And looking at some of the numbers and data of, usage across protocols, there are a lot of users that don't actually go between rollups, which is probably an assumption we hadn't made originally. So we decided, look, we need to probably start to build this mechanism and build a version of Lyra that would be modular enough to work on multiple EVM compatible networks and rollups, whether that's Arbitrum or Polygon or something else. So once we decided we were going to make that choice, the next thing was like, okay, well, where should we deploy next? And like when you start to look at the numbers, Arbitrum has been leading metrics in TVL, transaction volume, users and activity basically since the get-go, and doing also without having a native token to run incentive programs. So I think the job the Arbitrum community has done just on bootstrapping a really organic community has been second to none, and that attracted us. No. So it was kind of obvious that we'd be looking at Arbitrum, and our community sort of started to look there very, very early. The other thing as well, which I'll touch on, is that I think being an L2 native protocol, we're looking at like, where is L2 native DeFi really starting to shape up and take place? And I think the preeminent example of that is obviously GMX, which has taken the crypto community by storm the last year or so, and has been done so fully native to Arbitrum. I think we'll probably touch on that a little bit more later as well, but we're sort of looking at Arbitrum as one of the really cornerstones of this L2 native DeFi, and we want to be there to support it in all the ways options can. And finally, I guess I'd just say is like we've had some meetings and discussions with the Arbitrum team over the last three to 6 months, including meeting some of them at DevCon, and they impressed us both with their technical expertise, but also their enthusiasm and willingness to help across multiple functions, whether that's kind of engineering help, BD and marketing, or even community stuff like having us on this AMA today. So I think really it was pretty obvious once we looked at all those factors that Arbitrum was the next place to go. And with this Newport release coming out now it just seemed like the time was right.
Awesome. Yeah, we are quite transparent about the white glove approach we take with most, if not all, of our partners. So we're really happy that you guys came on board. I feel like I can speak on behalf of the community as well, especially our DeFi community and our traders, that they're excited to have Lyra onboarding into Arbitrum. You mentioned GMX. So first question was why Arbitrum? So now why GMX?
Yeah, I mean GMX obviously taken things by storm here, and probably one of the preeminent DeFi projects out there. They have the deepest liquidity for perpetuals on Arbitrum, which kind of made it a no-brainer for us. They support a variety of different assets. They have an extremely good integrations team that we've been working with for 3 months or so, or if not longer, who have helped us really get onboarded and using that liquidity in as quick as a time as possible. So we found them to be very professional and have enjoyed working with them. And for us, it just makes sense. They have a thriving community. We want to show them, exactly how options can work well with perpetuals. They work really well together, whilst also, using the deepest liquidity on the market. So kind of a no-brainer for us.
Yeah, that's fair. I think a lot of people who watch the DeFi space and are into the perpetuals and options trading, GMX comes on their radar quite heavily. So when you talk about integrating, I guess, with other projects, if you're able to talk about it already, are there any other projects on Arbitrum you're looking to kind of collaborate with? There's lots.
Yeah, there is lots. Obviously, we can't drop too much alpha before collaborations have been announced publicly, but it's been really exciting talking to a lot of innovative projects on Arbitrum already, and the community has been really welcoming and supportive. I can probably dive into the nature of some of the integrations in the works, and then I think people will be able to draw conclusions about what projects they think are involved. If you kind of are up to date with the Arbitrum ecosystem. So I guess to start, the bread and butter integration for Lyra is the DOV, or a decentralized options vaults. And these are like the typical structured products that we saw hit product market fit last year using options. And that would involve, selling covered calls or selling puts, and then receiving premiums and that forming yield. And this is awesome because it provides soft flow for LPs in Lyra, as users passively buy and sell options on the other side of these vaults. And I guess what's different about DOVs on Lyra? Well, previously, option vaults and the most successful option vaults have only executed via an OTC, or over-the-counter auction, with a counterparty or a large trading house. And we're excited to see new types of option vaults on Arbitrum that utilize the advantages of the Lyra AMM to actually create these new forms of yield. So that might look like just executing over time to reduce slippage and not just executing in one big bundle, and having that completely on chain. And so you can go in and watch these transactions occurring. It's not occurring in an OTC way. So expect to see those and new innovations in that space. We're really, really excited about that. I guess two other kind of categories that we've been of people that we've been talking to. I guess the first one would be leveraged vault deposits. We're really excited about that. It's kind of in the past, there hasn't really been a venue for people to leverage deposit into Lyra, and this would give the opportunity for people to improve the capital efficiency of their their market maker vault deposits, and then just get access to more yield for their capital. So that's really exciting. And also, something that we're seeing on Arbitrum is more manual approaches to using Lyra options. Things like treasury management strategies and productizing arbitrage opportunities. These are some really exciting areas to look into. As Nick has mentioned, options can be really put together and crafted into different payoff structures for really any use case. And we've seen some sophisticated treasury management already on Arbitrum. There's one project in particular that we're like really watching closely that does that. And yeah, so that's like really exciting to see, because it's the first move into that like more sophisticated approach to financial management. And yeah, well, I mean, just to finish, we're like also excited to see some of our current partners move across to Arbitrum alongside of us. So yeah, that's like a TLDR on what we're looking, the different projects on Arbitrum we've been talking to.
Yeah, we're definitely excited to see some of those ecosystem partners coming over to Arbitrum and having the multi-chain approach, as a lot of us kind of believe in long term. So you guys have mentioned the word perpetuals and leverage a few times. I'm wondering, just for the community, if you can give kind of a bare bones definition of what that means in the context of DeFi.
Yeah, sure. So a perpetual is, essentially, well, it's sort of a product born out of the concept of a future, which allows you to go long or short like an underlying asset like ETH or Bitcoin. Typically, futures used to settle at some point in the future. So I'd buy one ETH future now, and in 3 months' time, when the future expires, I get delivered one ETH by the seller of the future. So I get one physical ETH. Perpetuals are kind of like a future, except they never expire. They just keep going and going. So instead of actually being delivered, what happens is there's a funding rate that either people who are long pay the people who are short, or vice versa, depending on the supply and demand imbalance. And there's a few different mechanisms for calculating the funding rate. It's kind of a crypto native product. It was kind of invented here, at the very least popularized. Started with BitMEX and then wider within crypto. And the other thing about perpetuals and futures is they allow you to have leverage. So when if you went to a spot exchange with $1,000, you could buy, what is it, like 0.6 ETH now, 0.66, 2/3 of an ETH. Or you could, 5x leverage that and buy, 3 ETH with a perpetual. So they kind of afford this easy leverage, which is very good for capital efficiency. With respect to Lyra, the good thing about perps is, one, they have the most liquidity in the space, particularly on chain. So GMX, and liquidity begets lower spreads and lower hedging costs. So GMX has very low fees as a result of the high liquidity and the mechanism that they're built on top of, which should reduce fees, for the Lyra AMM when it collateralizes and hedges its options. So for us, that's great for traders because now they'll have lower spreads, and it's great for LPs because there'll be more volume due to lower spreads as well as lower hedging costs generally. So we're really excited to use perpetuals, and this is a feature of the new version. The old version used sort of synthetics, which are much closer to spot products as opposed to having the perpetuals out there. So for us, it'll be a big step forward.
Right, and that's a big part of the value proposition of like the integration with GMX as like a flagship on Arbitrum for you.
Absolutely.
And so you mentioned that you guys kind of came out of the synthetics ecosystem. If you can talk about it at this moment, are synth assets something that will be coming, the integration with GMX and with Lyra?
It's possible. I don't believe we will. I think, now that we've shifted the mechanism to rely on perpetuals, they're generally a useful product. Synths might be more useful for the long tail, where there's less perpetual liquidity, and you're kind of getting closer to trading spot, which is, a fair bit safer in some respects. But for ETH and Bitcoin, I imagine we'll be using the perpetuals.
Okay, cool. Thanks for answering that. And then I guess just for like the next, 1 or 2 quarters of 2023, what can people expect from Lyra while building on the Arbitrum ecosystem?
Yeah, sure. I'll take this one. So we can probably split this into like 2 sections, like what to expect with Newport in the next kind of couple weeks, and then what to expect after that. So actually today, like in a couple hours, we're going to be migrating staking from Optimism to Mainnet. This will do a couple things. It'll unlock on-chain staking. So previously, rewards have been calculated by an off-chain script, so that'll be moving on-chain. It'll unlock on-chain voting for Lyra holders, which is interesting to like participate in Lyra governance. And it'll also kind of improve the staking UX across chain as we move multi-chain. So that's happening today. So keep an eye out for an announcement if you're a Lyra
Oh,
staker.
congrats! Exciting.
Yeah, it's a bit of an admin task, but there will be like sufficient instructions for Lyra stakers to migrate their liquidity across. So keep an eye out if you're a Lyra staker.
So what are you guys doing here? Go handle that migration.
No, all right. See ya. No, I'm kidding. I'm kidding. So then I guess that like raises the question, like what's actually happening and what's going to be the process to launch with GMX on Arbitrum. So this is going to happen in 3 phases. Dates are still kind of fluctuating, so I'm not going to drop any hard dates, but the first process will be to soft launch trading with a fixed amount of funds. This will be like a short expiry, no incentives, and this will really just be for people within the community who have kind of used Lyra before, who are familiar with the system, to jump in and give it a test. And for us to kind of monitor how the mechanism's going. So that'll happen first. It'll be a soft launch. The trading conditions probably won't be amazing, but it'll allow us to kind of test the mechanism before we go all out. The next step will be shutting off that trading and opening deposits to the vaults. So this will be the opportunity for people to come in and deposit liquidity for the first time on Arbitrum. That'll be open for a couple days before trading starts, before there's any boards. People can migrate their funds from maybe Optimism with the deployment kind of slowing down over there, or they can deposit new funds. It's really up to them. And then after that, once there's liquidity in the pools, then it's kind of all clear to launch. And we're going to be launching trading, and we're going to be launching vault incentives. And that's going to be exciting. That's going to be really exciting to see kind of Lyra on Arbitrum full-fledged for the first time. That'll be a big announcement. Yes, exciting.
What's the timeline on that, I guess, if you already have it?
A couple weeks.
Okay.
A couple weeks. I don't want to do it to the product people and give everyone a solid date, and then for many
they'll come for me.
Yeah, they'll come. Yeah, you asked the question. So I guess like from there, that's really like base level. Trading might not be there might not be a lot of liquidity on day one, but then over the next couple weeks, incentives are going to increase, trading volume is going to increase, liquidity will increase. We'll see these new integrations come in and start driving volume, and then we're going to really be able to see Lyra at a new capability, at a new performance level, and that's going to be really, really good to watch. So that'll happen in the kind of the weeks following the launch. We've got some really exciting things planned there too. Can't leak any alpha yet. Other than that, after that, we've got some like cool community stuff. We've got a reply guy competition that hasn't been announced yet. And this will be an opportunity for people in the community to earn some Lyra by spreading the word about the Arbitrum ecosystem integration. So you'll kind of get incentivized to go and be a reply guy. I know on CT that's typically frowned upon, but we're excited to see that competition. Now, I've also heard some rumbles of a Lyra NFT project, but I can't confirm or deny that yet. We're also not stopping with Newport. Like Newport's really exciting, and it's a big innovation for DeFi options. But there's more R&D on the way. I posted like a tweet the other day on my profile that like I would say that like only 25% of all of Lyra's R&D is actually made public, and there's some things going on behind the scenes that really haven't even been spoken about yet, and those are like the kind of huge innovations that we're going to be able to release with Lyra V2 and beyond. And so, yeah, things are still happening behind the scenes, and they have been happening for months and months. So expect more improvements to the system over time as we move to becoming this like options liquidity layer for all of DeFi on Arbitrum. And yeah, really excited about that. And I think that kind of covers it for like the next steps that we can really talk about.
Okay. And with you guys were the first, or one of the first, if not the first, layer 2 options protocol. So it kind of makes sense for you guys to kind of pave the way on creating that multi-chain narrative for options, and pushing that envelope on having a more, I guess, like stable use of options and less speculative over time within the DeFi trading landscape.
Yeah, we love to claim that label as the first layer 2 native project, and it is true. Like there was no layer 2 native protocols. People were launching on L1 and then kind of slowly migrating across to L2, and we were under the great guidance of like Mike and Nick and the co-founders, like having the foresight to go and say, layer 2 is really where the DeFi activity is going to be in the future. I think that kind of gives insight into how our team thinks, like trying to skate where the puck is going, rather than kind of accepting what the current norm is. So yeah, going to be some exciting stuff over the next
building the space that you kind of want to see / kind of believe where it's meant to go from a technology standpoint.
Exactly. Do you have any more questions, or should we field some questions from the community?
Just one question about the DAO, I guess. So you guys, the DAO is kind of how you guys got approved to come over to Arbitrum. They voted in favor of it. So if people want to get involved in the DAO on the Arbitrum side, how would that work for them?
Yeah, I can take that. So, I mean, easiest way is just jump in Discord. We've got a super active community in our DAO chat, talking about proposals, reviewing them, voting on them. We have a council as well that kind of are the ones that formally vote to approve or reject leaps, similarly like the Synthetics Council model. But there's a lot of great proposals that come out. So if you want to be part of that, if you want to suggest a new asset, something you think would benefit the DAO, the Lyra DAO and Arbitrum, or new integration or anything like that, there's an entirely open process for you to come write a leap. We call them leaps. They're Lyra enhancement action proposals, and you can put that forward to the community, and you'll get your time of day for that. So I would just say join the Discord, and on that as well, like whether you're a pro options trader, prospective LP, or even just interested in learning about options, our community is super friendly and really welcoming. So just jump in and find a channel that suits you, and there'll be a lot of people to talk to.
All right, that's awesome. So it's pretty easy for them to get involved, like off chain, I would say.
Yep, that's right.
All right, great. Yeah, let's open it up for community questions. Just raise your hand if you have a question for the Lyra team, and they'll do what they can to answer your question. There were a few when we were talking, but they since stepped down. Nobody? After all that innovative speech, there's nothing to ask? All right, here we go.
After all the IV mean reversion, name it. After all the applause, not even one.
Yeah, I thought they were applauding. All right, we got one person here. Ultra Hedge. There's a relevant name. Hey, Ultra Hedge. We cannot hear you if you are asking a question.
I think he's muted.
He's currently
Sorry, guys.
hedging his speaking ability.
There you go.
Sorry, guys. Yeah, so I'm just wondering, when we move over to Arbitrum, will we still be using the SUSD as the main form of collateral, or are we moving over to something more widespread, like USDC or something like that?
That's a good question. We will be using USDC as well as ETH as the collateral on the ETH on the underlying collateral, wrap Bitcoin, ETH, whatever it is that's being traded. So USDC is the sort of quote asset for Lyra and for GMX as well. So it should be really interesting to see how that affects the usage of the protocol and the uptake and the demand for LP in the protocol as well as trading. So we're excited to run that experiment and see how we go.
Perfect. Thanks, man. That's all I wanted to know.
Yeah, that is a good question. I should have asked that. All right, thanks, Ultra Hedge. All right, do we have any other questions for the Lyra team? Any curious Arbonauts out there? Actually, that makes me wonder, do you guys have like a community nickname?
Yeah, I'd say the Lyroos.
The Lyroos?
Yes, sir.
It's debatable, but yeah, I guess by default. That's it.
You got to double down, Nick. You know,
Is there a short backstory to that, or it's just it is what it is?
it is what it is. Potential, yeah.
All right, they might start calling you Lyronauts here in Arbitrum. I don't know. I can't speak on.
Look, I think we'd be fine with that. It's probably better than Lyroos, but
Yeah,
you know.
I guess if you stand for nothing, you'll fall for anything. So we haven't stood for anything on that front.
All right, Crypto Jack, you have a question for the team?
Yeah, I'm sorry. I just got on this call like 5 minutes ago, so I probably missed everything. I was just wondering, how are you different from GMX or any other option trading platforms that are on Arbitrum right now?
Yeah, I mean, GMX don't support options, but in terms of other options platforms, I guess the best way to see for yourself, I guess, and have a look at the platform. Look at what you can do on Lyra. You can buy and sell loads of different options at competitive prices with like good spreads in a way that, you know, at any time, right? Like you can open, close, and trade much like you would on a centralized exchange. There are still capital efficiency, you know, constraints that we're trying to work through and build around. And like that's a big subject of the research we've been working on in the background. But in terms of like the variety and ability of what you can do with Lyra's options and how you can program with them, I don't think you'll find a product that you know, sort of competes in that game. There are lots of other projects that do options in slightly different ways, with slightly different takes. They might have a vault, or they might force you to LP, you know, per option or anything like that. But for Lyra, if you're a trader, you get the biggest variety. If you're an LP, all you have to do is deposit straight into the vault, and it will market make across all strikes and expiries. So you don't have to select a given strike or renew it, or every time the option expires. So we think we've simplified those two processes down. And yeah, we'd love for you to see for yourself and try it out when we're live.
Gotcha. Is it only crypto right now, or are you going to have stock as well?
It's only crypto. You know,
okay.
Certainly in a direction, you know, down the line, and this is all regulatory dependent and things like that. We are interested in looking into real world assets, and again, starting to link more finance on, you know, with the infrastructure we're building on chain.
Gotcha. Oh, sorry to compare you to GMX. I got the options and leveraged mixed up.
Oh, that's all right. We're working with GMX, so yeah.
Okay, great.
Integrating with them.
I'll definitely check it out. Thank you.
Thanks, Crypto Jack. All right, we got another person here, Asen. Let's bring him on stage. Who knows, maybe once you guys are live on Arbitrum, we can do a live tutorial to showcase the platform in the near future.
Yeah, that'd be great.
All right, Asen, welcome to the stage.
Hi there. This is the first time I've ever made a Twitter profile just for this. Thanks for even doing this. But just a short question here. Would there be now, after this Newport integration or Newport upgrade, a potential to maybe mix different perpetual swap protocols, almost like not just necessarily using GMX, but also using GMX and like maybe a G-Trade or Mycelium, like in the distant future? Or would it only be possible to do one protocol's perps at a time or per vault, do you think?
No, it would definitely be possible to go wherever the best price is being quoted. The Delta hedging module has been built to potentially support these things. It would require some amendments and some, you know, considerations about how we treat collateral, right? Because a GMX perpetual token is different to a, you know, Mycelium one or whoever. But it's certainly part of the architecture that this version has been built to support that possibility in the future. Because really, yeah, assuming that the underlying protocol is safe and secure, we should be going where the best price is.
That's excellent. very exciting stuff to hear. Sorry I was 25 minutes late, but thank you. That's all.
Also,
All right,
yeah,
thanks.
very familiar face in the Lyra community, Asen. So yeah, good to finally meet you.
Yeah, well, it's an absolute honor. And I've got a big picture that I'm working on the marker board too. Sorry, I haven't said anything in a while, but I've been learning a lot. Didn't know anything about DeFi until just about a couple months ago, really. So thank you for switching over to the GMX perps to really enlighten me as to the bigger picture here. It's a beautiful world we've got.
Awesome.
Thanks, Asen. Yeah, and I agree. It's quite a big ecosystem or landscape, or however you want to view it, and we just keep plugging in those spots to kind of connect the dots as we move through the build market, as we call it.
Yeah, for sure. This is the big project of our time.
Yeah. All right. Any other questions? In the meantime, why don't you guys tell everyone where they can kind of find, the most information they need, any educational content about Lyra and options, and also maybe what accounts they can follow to keep up with any alpha about options and Lyra and that ecosystem.
Yeah, sure. Feel free to follow us. Like, we're always retweeting the Lyra account. The Lyra account is kind of the source of truth for these announcements, like the main Twitter account. I would also join our Discord, join our community, get involved as you would with any other DeFi community. We also have a community-run media initiative that kind of focuses on education and research called the Lyra Short Put. Lyra Short Put. Kind of a bit of a pun if you're an options nerd. But the Lyra Short Put is, it's a consistently doing threads and community updates and quarterly report coming out soon. So I would say keep up to date there. But yeah, follow the team and follow the Lyra main page to stay up to date. We tried to make education a priority and as clear as possible in our website and on our kind of in our community. So yeah, we've got a channel called Lyra Learn. So if you have any questions, like drop them and somebody will pop up.
It just rolls off the tongue.
It works. Can you guys hear me?
Yeah, it's pretty nice. Bit of like
hey Fudzy.
Will the Lyra team keep up with the stability and risk of GMX when allowing long-term new option positions?
Yeah, I mean, that's a fundamental, part of any decision to even begin to integrate with the protocol is examining how the system works and the risks associated with it. I would say for Lyra, the dependency with this new rewrite is, in terms of risk from external protocols in general is much lower because now we're using USDC and ETH as a base. So those tokens are safe no matter what happens. So the ones that are deposited into the vault. The sort of liquidity at risk is the delta hedging module, and that will often hold 10 to 20% of that value in. And so any problems with GMX, we'll be continuously monitoring. But so far, the platform has been robust, and it's sufficient to attract the sort of high amount of liquidity that exists there. But like with any partner, we'll always be watching that, and we've done that with Synthetix for over a year. They've performed extremely well as well. And so, yeah, big part of our job is to make sure that and keep up to date with what's happening.
Cool, makes sense. And if the AMM needs a referral code, I got one.
Sounds good. We'll talk after.
Yeah, thanks, Fudzy. All right, last call for questions, and then we will wish the Lyra team happy migration tonight. All right, I guess that's it.
Awesome. Thank you so much for hosting us, and looking forward to deploying and a fruitful year ahead, hopefully.
Yeah, thanks a lot for taking the time out of your day. I know you have a lot on your plate, and we look forward to chatting more and and communicating with the Arbitrum community as a whole. Good luck tonight.